One of the consequences of the UK leaving the EU has been the removal of the EU financial services passport for UK firms. Financial services globally are among the most heavily regulated sectors of the economy, and so costly regulatory requirements apply when a firm accesses another jurisdiction. In the EU, however, a firm licensed in one member state can provide financial services in another without undergoing additional new regulatory rules or licensing arrangements. These access arrangements are only available for EU firms. Firms from outside the EU can either set themselves up in the EU and become EU firms, or if the EU finds their home regulatory rules are equivalent, and that means very similar to EU rules, they can then access the EU on the basis of those home rules. Now, the Trade and Cooperation Agreement doesn't change this. Like all EU trade agreements, it's very limited on financial services, and it doesn't provide any form of preferential treatment for the UK. The main thing it does is give UK firms the right to relocate to the EU, to set up and establish themselves, in effect become EU firms. It doesn't deal with the obstacles represented by licensing and regulation, and in particular, the trade agreement doesn't provide for equivalence. Equivalence is a separate process run by the European Commission, and it exerts a very strong gravitational pull on the regulatory system of a third state, in effect limiting that state's regulatory autonomy. At the moment, no decisions have been made by the EU on the equivalence of the UK system. It may be that equivalence is granted in the future, but there are two opposing positions here. The UK does not want to be a rule taker from the EU, and it wishes to diverge over time from EU rules. The EU's view is that equivalence requires alignment with the EU single rulebook, and it has concerns about the UK's plans for divergence. Now, it remains to be seen how the current limitations on EU access for UK firms will impact on the City, which is the leading capital market in Europe, particularly as the EU is still developing its capital market, and there are, of course, strong competitive interests here. Financial services are, of course, of critical importance to the UK, representing some 7% of GDP. Measures are being considered by the UK government to strengthen the competitive position of the UK internationally. We know from financial history that markets are highly dynamic and very good at finding solutions, so the City can be expected to adapt and to develop substitute markets internationally.